Good afternoon and welcome to Your Stocks. I'm Pavitra. For the market, things are looking very good. It's held steady all through the day. So right now we're looking at a 135-point gain on the Nifty. Broader markets also completely in steps. You have the mid-cap index, which is gaining around 300 points, 320 points. And, for the banks, from the lows of the day, we've seen quite a recovery. So right now, up around 300 points in the Nifty Bank as well. But from the lows of the day, there's been a near 400-point recovery that you're seeing on these names. The clear pocket of preference today is the auto pack. So if you look at the Nifty, a lot of the top gainers, Bajaj, M&M, Maruti, that entire pack doing well. But you also have, names like Wipro coming in. So there's participation across the board from sectors. The only place where you're seeing a little bit of red today is the PSU pack. But of course, that pack has run up a lot. So, can't really complain about that. We have both of our guests joining us because we've got a lot of queries on individual names. So we have Ruchit Jain joining us. He's research at 5paisa.com as well as Shahina Mukadam. So Ruchit, Shahina, thanks a lot for joining us and taking the time for this show. Like I mentioned, we've got a lot of queries, that have poured in. So we're going to get to the first one. We have V. Srinivasan, who's on the line from Tamil Nadu, and he has made investments in ITC. Mr. Srinivasan, thanks for calling in. Tell us what is your query, and then we'll have both of our guests help you out.
Yeah, my query is I bought this ITC shares of 307 shares at 491 rupees 70 paise in July 23. I thought it will go up, but it has come down and it is now at 407 or something rate.
Yeah.
Do I need to sell that
and
book the loss and then buy some other share or wait for some time?
Okay, I definitely understand your concern. You bought at 491, so that's pretty much near the highs, right, for ITC. Shahina, let me come to you on this. Bought recently, but it has corrected a little bit. Even if you look at the past 1 month, ITC is down around 13% or so. Would you think that this is a stock that you can hold on to if you do have a very long-term kind of horizon?
Well, yes, actually, you can. The issue over here is less to do with the company's performance. Fundamentally, the company has done pretty well. Even if you saw the Q3 numbers, the plans are in place, the growth is there. But the problem is there is liquidity, potential liquidity that is likely to come in, which is actually affecting the stock price, I would say. And you have, the major holders. You have BAT, you have LIC, you have the Government of India. All of them hold quite, large chunks of the equity. And BAT has recently come out and said that they are looking to sell some, disinvest something like 3 to 4% of the equity. They hold 29%. So they will continue to hold 25%. So I think this is a unique case of liquidity affecting the overall stock price. So I think till this settles, the stock is likely to languish at the current levels. I personally also hold it, and it is disappointing, but in the long term, ITC will give you a return. So one can continue holding and maybe average if the stock corrects and hold for the medium to longer term.
Okay, so for the medium to long term, it's still a hold. But of course, on the back of this news flow that you mentioned, back looking to divest up to 4% stake, the stock did suffer quite a big cut. Ruchit, what would your call be on ITC, and how does this one look to you on the charts?
A very good afternoon to everyone. Well, the short-term trend certainly seems to be negative because we have been witnessing that price correction in last few weeks. But I think these are not the prices where one should look to exit from existing holding, because if you look at the weekly charts, then the medium-term support on the weekly charts is placed around 390 to 400, and stock is quite close to those levels. So I think maybe some downside could be there towards 390 in the short term. But considering that oversold scenario, I think a pullback move going ahead could be expected again towards 430 to 440 at least. So don't exit at current price levels. These are too low price, I think, on the short-term charts. Whenever we see a bounce back towards that 440 mark, I think take a review again at those levels, because depending upon how the volumes pan out during the next leg of price up move, that would be very crucial to analyze. So hold for now and review the stock again when it comes around 440.
Okay, got that. So, Mr. Srinivasan, I hope that helps you. Both of our guests saying that you don't need to get out of ITC right now. Hold on for a bit. See how things go, and you might at least get a bounce, and then you can consider it at those kinds of levels. For now, by the way, the stock is holding up absolutely flat today. Not too much of a move there. But let's also move on and talk about another query. We have Raghu, who's written in from Chennai. He holds 6,000 shares of Yes Bank, which he bought at 15 rupees a piece. And he wants to know whether he should book his profits or remain invested. I don't know how long he's willing to remain invested in this, but Shahina, there are a lot of people who got into Yes Bank when it was at much lower levels. The stock has, of course, come off those levels. But do you think in this kind of scenario, you should just take your money and get out of this stock? Or do you think it makes sense to stay invested in a name like this?
I would recommend stay invested, keep a stop loss, maybe 25, because his buying price is pretty low. He can continue holding. Quarter 3 numbers were very healthy. And we've seen a lot of buying, selling happening between institutional investors. At the same time, I think fundamentals are improving, so one can continue to hold.
Okay, continue to hold. Ruchit, I'm sure the charts on this one look very interesting, right? What would you recommend?
It's very interesting and very volatile too. The kind of ups and downs that see stock, suddenly it's not everyone's cup of tea. But no, technically, I think the only good thing that I can see is that the recent price move has been supported by good volumes after a long period of time. So I think if this pattern continues, then you can expect levels around 34 to 36 range, where that would be ideally a good range to take an exit from the stock. So hold for now, but I would even request him to keep a stop loss below 24 rupees, which is a very crucial support zone. And whenever the stock comes around 34 to 36, exit the stock in that range.
Okay, got that. So that is both the technical and fundamental view on Yes Bank. Moving on now, we have Siddharth who writes to us from New Delhi. He says he has 25 shares of BPCL, which he bought at 473. What a good call to buy BPCL at that price. He wants to know the future prospects of his investments. Ruchit, let me come to you first on this one. What a move, right? This stock has seen, I mean, a lot of the oil and gas names, but specifically BPCL. Do you think there's more here?
I think yes, I think definitely we should see more upside from current levels. Firstly, his buying price is quite good. So he has a good margin of safety that in case some short-term corrections even come, then also he can continue to hold on. And if you look at a bit longer term charts, the stock is trading at its all-time high. But the pattern that it had created before this breakout indicates it's around 750 to 760. So still about 100 rupees higher from current levels can be expected. So hold on for targets around 750 would be the call on BPCL.
Okay, targets of 750 on BPCL. Shahina, there was a note from Jefferies this morning where they're saying among all of the oil marketing companies, BPCL has the largest margin of safety and they have a target price of almost 900 rupees. What is your call on BPCL and do you think, that kind of target makes sense to you?
Well, I would say it's a bit aggressive. At the same time, I think the numbers in Q3 were very healthy. And if crude were to stay between the $75, $85, numbers would continue to remain positive going forward. At the same time, I think my top pick in the sector would be HPCL, more because of the capacity addition that is coming on stream in the next 1 year, which I believe so volumes as well as stability in their margins, GRMs. I think that would give you a better profit growth. So to that extent, I think one can take a pick, but yeah, all the oil marketing companies are in, the sector, overall sector is doing well. So all the companies are likely to do better in the next couple of months.
Okay, got it. So that is on HPCL. By the way, for the markets, it's holding up very steady and the Nifty Bank, like I was mentioning, has come off the lows quite well. If we can just pull up HDFC Bank, I want you to see it's off more than 1% from the day's low right now. So it's trading, just about 0.5% in the green right now, but it was well in the red just a short while ago. Ruchit, on HDFC Bank, of course, we've seen the kind of erosion over the past month or so. Do you think we've seen the worst of it and, now it's going to find at least, some amount of stability at these levels, if not sort of move up more?
Yeah, I think a short-term pullback move definitely should be there. So if I look at the derivatives data, post the results which came out, we have seen a record increase of open interest in the stock and prices have corrected significantly since then. So which indicates a huge amount of short positions are there in this stock. And the stock has approached that support of 1360, 1365. So I think whenever such situation happens, that stock comes near the support and there are two short heavy positions. I think those positions get lightened up. So one can expect some short covering move in the stock in the short term, which should lead the stock towards 1450 to 1460 at least. So in the near term, yes, positions are quite short heavy. So some short covering move should be expected.
Okay, that is on HDFC Bank. Shahina, what is your call? And, would you feel comfortable putting money into HDFC Bank at these levels? Do you think that some kind of a pullback is expected now?
Well, yes, I think maybe for the shorter term, it will consolidate a bit more because, the numbers because of the merger over the next 2-3 quarters is expected to remain subdued. At the same time, I think it's a good portfolio stock to add in these adverse times, be a contra, and you can add HDFC to your portfolio for the medium to longer term. And of course, you have other stocks like ITC, ICICI Bank, you have something like an SBI. I think the overall sector for the large cap banks is doing well and should continue to be part of your portfolio for the longer term.
Okay, so maybe you could use this kind of dip that has come through in HDFC Bank to accumulate this stock, and that could work for you later on as well. And I think there's never been any kind of debate that this is a good stock to hold in your portfolio as well. But moving on to our next query, this is on Cera Sanitaryware. We have Dinesh Saili, who writes to us from Pune. He holds 20 shares of Cera Sanitaryware, which he bought at 8,000, and he's asking whether he should book his losses or remain invested. Shahina, I think, the high for Cera Sanitaryware was over 9,500, right? So it's come off quite a bit from those levels. Do you think that a move to at least his buy price is possible in the medium term?
It's difficult for the shorter term at least because the Q3 numbers were pretty disappointing. And while the management is saying that, the second half, the last quarter will be better, I think for the next quarter also, we are likely to see margins under pressure and subdued demand, continuing on into the fourth quarter, which we saw in the third quarter. Valuations are also pretty expensive. So if you're looking at the shorter to medium term, I think it will be better for him to switch. If he's a long-term investor, yes, the brand is good. They've got new products that they are going to launch over the longer term, next 1 to 2 years. So there, I think things should revive.
Okay, so maybe for a long term, you could consider staying invested. But if you're looking at a shorter term, it's probably better to switch to another company. Ruchit, your call on this one. How does this look to you on the charts, and what is the kind of target price that you're working with?
So this seems to be a short-term correction within an uptrend, but this correction I think is still not over yet. If we look at a bit medium-term charts, then the major support for the stock would come in the range of 6,900 to 7,000. So I think the stock should correct further towards that 7,000 mark in the near term. So if it's just a short-term trader, then my advice would be to book losses and exit from the stock and review the stock again when it comes in that range of 7,000 to 6,900 if he wants to buy it for mid to long term.
Okay, got that. So that is on Cera Sanitaryware. By the way, I don't know why I spoke about the Nifty Bank because it has come off quite a bit. It's down over 100 points, over 300 points right now from the highs of the day. So there has definitely been a little bit of a slip that's come through in the Nifty Bank, holding up at just around 100-point gain right now. So we will talk more about that in just a bit. We also have a lot more queries that have come in. So Ruchit, Shahina, I request you to stay on. We'll be back in 2 to answer all of those queries. Welcome back. You're still tuned into Your Stocks. By the way, like we were mentioning, some of the banks are definitely giving up a little bit of the gains that we saw. So take a look at SBI, for instance, at the low point of the day. Actually, a lot of these larger banks are all at the low point of the day. SBI is down 2% from the highs of the day. You have Kotak, Axis, all at the low point. ICICI has also seen quite a knock from the top of the day. It's still holding well in the green for the Nifty Bank, but it has come off significantly in just the past few minutes. So that's what's going on with the Nifty Bank. But let's get back to our queries. We still have our guests with us. So Ruchit and Shahina are still with us to answer all of your queries. And the next one comes in from Vinod, who's writing in from Hyderabad. He says he has 6,500 shares of RailTel, which he bought at 388. He wants to know whether to book his losses or remain invested. Shahina, I'm sure a lot of people, because of the kind of momentum that was being seen in this entire railway pack or in the PSU pack or individual pockets like this, did get in maybe at a little bit of a higher level and are now looking at this kind of loss. What would you recommend? Do you think it's best to just get out and wait a bit before you decide what to do with the sector? Do you think you can still see higher levels on some of these names?
There is some bit of profit booking that is coming into the railway PSU stocks. At the same time, and even RailTel has doubled over the last 1 year. But at the same time, I think, one can continue holding. The numbers were pretty good in the third quarter. And they have very good order book in hand. So I think one can continue holding and keep a stop loss, maybe close to about 350.
Okay, continue holding and a stop loss at 350, you said. Ruchit, what would your call be on this one? How is this looking on the charts? Do you think you expect more of a pull of a drawdown in these names?
I think in the overall railway space, from a short-term perspective, I'm not very bullish. So primarily, we have seen quite overbought readings post the recent run-up. And in this weeks of correction that we have seen, the weekly readings have started cool off. So generally, when such cool off period starts, it takes at least 3 to 6 weeks for the entire corrective phase to get over. Now, some stocks within the sector would go through some price-wise correction phase, whereas some stocks would go through some time-wise correction phase, depending how the strength is there. So for RailTel, I think it could be more of a time-wise correction where the stock would consolidate within a range in a broad range for 3 to 6 weeks. And the swing low is around 354. So I would suggest to keep a stop loss below this 354 levels. And in case if that gets triggered, then one should look to exit from it.
All right, so that is on RailTel and some of these other railway names as well. But moving on now to our last query, I'm going to try to squeeze in one more. We have Kathir, who writes to us from Tamil Nadu. He holds 100 shares of REC, which he bought at 263, so making pretty good money there. And also 100 shares of Power Finance Corporation, which he bought at 377. He's making money on both of these, but he wants to know the future prospects of his investments. Shahina, this is also one pocket which is, very hot, right? This entire power space and then power financiers, of course. Do you think there's lots more to see in terms of an upside here?
I think the pure power plays will do better than the financiers for the shorter term, simply because valuations have now become a bit stretched. Like, for example, I'll give you price to book for PFC is now 1.7 times current price to book, and REC is 2.4 times. Also, they used to be very good dividend yield stocks, but now even dividend yield has come off. So I think, as Ruchit said, for PSU stocks, this is likely to see some bit of a time correction. So I think, one can actually book profits partly and maybe relook at the sector after about a couple of months.
Okay, got that. That is on PFC and REC. With that, Shahina, Ruchit, we're going to wind down on this edition of Your Stocks. So thank you for taking the time and helping us with all of these queries that have come in. Thank you for joining us on this edition of Your Stocks. We have closing bell coming up after this short break.